Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. This is Jerry Correa. And so much has gone on in the week, Jerry. I don't think we're going to be able to get to all of the points that we just discussed off air getting ready. The first will be, the first is what's going on with this bank in England.
That's huge. Top story today, Jeremy.
Yeah.
Top story. I'm still trying to digest what's going on. We're looking at the figures, what's going on in the UK right now, but the people are waking up. And this bank called Metro Bank, there's a headline in the Daily Mail. Metro Bank customers are urged not to take their money out as bosses say they need to raise £600 million to bolster its balance sheets. And the article writes, there is no indication customer deposits could be at risk. So there's no need to make a withdrawal, guys. There's no need to make a withdrawal. That doesn't sit well with the citizenry. It's causing people to withdraw their funds, and this is happening right now. So we have to stay tuned because, as we know, the unrealized losses on investment banks in the U.S. right now is standing around $558 billion as of June of this year. Remember, Silvergate Capital, gone. Silicon Valley Bank, gone. Signature Bank, gone. First Republic Bank, all gone, Jeremy. Your take.
Well, and don't forget about Credit Suisse.
Yes, thank you, UBS, for saving Credit Suisse. Now they're on the balance sheets there.
So this bank in England is in desperate need of £600 million, but depositors need not be concerned. Somehow they will get bailed out or not. And at some point, it will be the depositor's problem, believe me. So people are becoming well aware of the doublespeak, and you're starting to see just how fragile a system can be and just how fragile trust can be. And they should be pulling their money out. And what they should be doing with their deposits is rolling it into something that has no counterparty risk, like physical gold and physical silver, which I guess would lead me to the next part, which is central bank buying, because there is an entity that has been buying a lot of gold and probably salivated at the drops in prices over the last week and a half, and that would be central banks.
Mm-hmm. They know what's happening. This is the smart money, as we say. Become your own central bank. We say that as well for the listeners, for our clients. Central bank demand, according to gold.org, the World Gold Council, central bank demand still sizzling in August. They wrote, central banks reported adding 77 tons of gold to global reserves in August. China, Poland, and Turkey were again buyers. No notable sales during the month. As we head into Q4, central banks remain on course for a strong annual total. They are accumulating, and remember, central banks require reserves in physical gold for two reasons. It's very simple. You need a reserve because for liquidity. Number one reason, gold bears the number one market cap globally. You're never trapped. If you need to sell, you can sell. Number two, your gold is decoupled, disassociated, independent from risks in the financial markets and conventional arrangements. These conventional arrangements are currencies, financial institutions, digital systems like the SWIFT system. Gold has nothing to do with that. But interestingly, gold is a monetary asset. It's money. So without involving the risky financial system, you have something in your own possession or inside of the vault that it's your own reserve, and it will perform.
That was an epic rant.
I'm ranting.
And don't forget, he who owns the gold makes the rules. So they will have a seat at the table when a new monetary system is being discussed. And they definitely understand the nature of physical precious metals, that it is real money. Bernanke completely lied to Ron Paul when he said it was a relic, that there's no reason for it. You know them by their actions, and they are buying physical assets for their banks. And now it's not every central bank around the world. It's specific central banks, but they definitely understand that it is real money, because who better to understand real versus illusionary? If you had a printing press in your backyard, what would you be buying with that illusionary money, quote unquote, or currency? It would be physical things, physical things. So it totally makes sense that they're doing it. The number 18778 silver, the website guildhallwealth.com. If you're looking to add some physical precious metals to your portfolio, you can go to guildhallpreciousmetals.com. That's our e-store. You can see the types of products that we offer, which are only globally recognized. They have to meet a very high criteria for sourcing ethically, refining to the proper purity, fashioning to the proper weight, and being able to handle global business. So the types of products and brands that we have, you're not going to find a million SKUs, 100 SKUs on our site. We've limited it to make it easy for the individual to acquire. And speaking of that, if you're new to the market, the e-store is a great place to go. Pick up a tube of silver maples, start really small, a 10-ounce bar of silver, maybe a single ounce of gold. Get some physical in your hands so that you understand what this market's all about and be able to make the next decision. Do you want to move forward with just keeping up, making regular purchases? Maybe you've made a purchase and you realize, you know what? I actually want to own this in my RSP. That's what I really want to do. And with the registered accounts, I think it's, we've been doing it for, 7-8 years now. And it's still it just amazes me what this vehicle does. Physical precious metals held outside the banking system, outside the financial system, but still within your registered account. We still go by the motto, if you can't hold it, you don't own it. It's physically there. You can physically go and personally audit it. Hold that bar with your serial number on it in your hand to know that it's real, that it's there, that it's not being mixed, commingled, and you are removing yourself from the counterparty risk that exists. Just like those depositors for that bank in England, you do not have that problem when you own physical precious metals, which is different, by the way, than having an investment like certificates, ETFs, gold-backed funds, anything where someone else actually is the custodian of the product and not you. Which leads, Jerry, to a market update. Let's talk about the market update. Admittedly, I didn't really listen to anything. I didn't watch any news. I saw the price. I kind of ignored it all this week. Because in my mind, when I see moves like this in the market, I think two things. I think JP Morgan wants to make some money. They probably, because of all the bad things they've done, they owe a lot of money. And number two, desperate times call for desperate measures. Whenever I see a big pullback like this where both gold and silver go well below the 200-day moving average, I just think there's something coming up ahead, that they're either trying to neutralize what's about to happen or something bad is about to happen. Some news is about to shock, and they're getting ready to tamp down the prices before they move up. That's all I see it as. And they're always short term. And here we are recording on Friday. Silver's already up 2% off the bottom. What were you looking at throughout the week with what's happening in the market?
Yeah, following the levels in gold and silver, obviously, I follow the technicals here. I follow the FX markets, the currency markets, the US dollar index, because they all give us an idea of where we should be aiming for. COMEX silver, obviously, the sell-off occurred with this narrative, the whole narrative of holding rates higher for longer, which causes the yields in the U.S. to spike, the dollar index to spike on the algorithms on these markets. And as a result, the algorithms are programmed to sell paper, electronic, gold, and silver. We heard just now that the gold is being bought by central banks. There is no selling of anything physical. What is being dumped is paper. So we're following these markets. Looks oversold. The yields look to be peaking. Silver down for 5 consecutive sessions, but keeping in mind it's up 15% from its 52-week low of $18 that hit last year. It rose 1.23% from 52 weeks ago, and it's up 2% today. Gold, we had 9 days of declines as the whole rate issue was being pushed. A quote from Bart Mellick, the head of commodity strategies at TD Securities, said this week, the whole narrative of holding rates higher for longer is the big reason why people are removing positions from electronic gold, as the opportunity cost of holding it has risen. So chasing yield. and that's what we've seen. But things have peaked. Both gold and silver look oversold. And in summary of this, the sell-off in paper, gold, and silver, Gold Fix's Vince Lancy gave us a summary to not get married to these rallies in silver and gold from August to October. Hopefully no one did. Keep the powder dry because it will be well used come November. Why? You have number one thing we're watching. What he is watching out for is the government shutdown, which was postponed. It was averted for 45 days. Watch potential Moody's downgrade. We already had 2 downgrades. In the U.S., you had the Fitch rating agency. S&P already downgraded the U.S. If there is a shutdown and this whole situation with the step down of McCarthy, the drama with Matt Gaetz, and what Matt Gaetz said on the floor this week was phenomenal. We'll get to that later. And then number 2, what he's watching is gold and silver's investment seasonality. And this is just a breath of fresh air, Jeremy, because going back 40 years, gold and silver perform during end of October, November. So keep the powder dry. Buy these dips. These are the time to enter the market. Don't waste time. Get in touch with Guildhall, and we'll help you tailor the portfolio, perfect hard asset portfolio. Crawl, walk, run. This is what we say, Jeremy.
The number 18778 silver, the website guildhallwealth.com. Much more to come here on the Real Money Show on 640 Toronto. Welcome back to the Real Money Show. The number 18778 silver, the website guildhallwealth.com. Jerry, in watching the markets come down, having a conversation with a few customers feeling antsy about the pullbacks in the market, I realized something which is so psychological in nature about the gold and silver market. They are down more days than they are up. It's all part of that psychology, and Vince Lancy talked about that in a part of that this week on his update. Just talking about that, even in 1980, I think the central banks were coming out saying, yeah, it's great that you want to own an ounce of gold or 2, but it can be volatile. These whole type of narratives that have seeped into the conscience of society. And, look, to me, I'm going to pull out a sports analogy, okay? But when you watch tennis, okay, a guy like Djokovic, he's missing like 48% of his points.
Mm-hmm.
He's losing 48% of his points. It's just that extra 2% that puts him over.
Yeah.
Now, obviously, people aren't looking for 2% narrative, right? Oh, yeah. People aren't looking for 2%. But the point is that this is about the psychology of if we can show, the idea is that if we can show that most of the time gold looks down, then nobody's going to be interested in it. Whereas we look at it from that kind of Rocky Balboa perspective. They push the price down $1 and we're saying, you're not so bad. It's like it keeps getting knocked down and you're thinking, keep throwing it. Keep throwing it because it's like Hulk Hogan getting stronger every time you knock him out. It's like every time, no one's selling on the dips. Everyone keeps buying more on the dips. You're just selling paper. And this is another fact. I'm coming to believe that all of the diversions that were created to stop people from holding actual physical metal are collapsing, and that they will collapse. That people will say, I don't want to own the ETF. Why are they pulling money out of the ETFs?
Right.
Because they're electing to go buy the physical. The ETF was created so that people wouldn't go out and buy the physical, that they wouldn't own it themselves. The banks would own it. And if the banks own it, then they can do whatever they want with it. You think Gary Gensler, okay, is going in and telling his boys, come on, boys, let's go audit JP Morgan and see if they've got the product at the ETF. No, they're not. Of course they're not. So people are going to realize that there is no replacement for actual physical, and that this narrative, again, I'm using that word, of convenience. I don't need convenience. I need the real thing.
Mm-hmm. Absolutely. They need the convenience. That's right.
I don't need the convenience to not ever own a car, okay, so that I can just pick up a phone and have a driverless car come pick me up. I don't need that convenience. I need my car.
Yeah.
Right? So That's what's happening. The ETFs will collapse. The certificates will collapse. The gold-backed funds will probably collapse. And anything that has those counterparty risks, people are going to realize that if you can't hold it, you don't own it. And we see buyers on the dips, not sellers on the dips. You know, but there will be a lot more buyers at the top because seeing is believing.
Yeah, it happens.
So I'm not saying that the psychological aspect of it, of seeing down days, doesn't stop people from buying.
Right.
Right? Because seeing is believing. They will buy at higher prices.
That is true. That's
unless they've been listening to our show.
unless, but yeah, the whole, that narrative, especially with you know, you don't need to own anything. You don't need to hold precious metals. The ETF is just as good as gold. Well, the ETF famously rewrote the prospectus a few years back that says, hey guys, we really don't have enough. We may not have enough physical gold and silver to deliver on these contracts. So the trust is down the drain. When you know you cannot get delivery, this is why we're seeing a drainage out of these institutions, out of the COMEX, out of the London metal markets. It happened before with nickel. When they audited, it was a bag of bricks. There's no nickel there. What is in your bank? What is in your wallet? What is under your bed? You know, where is your metals? You need to have it physically. It needs to be owned outright. And you need to have that allocated to you. Allocation means title ownership, and this is what Guildhall thrives for. If there was any area of compromise in ownership in the RSPs, we would simply just not offer it. You might as well just break the RSP, come here in the office, and pick up the gold. But regarding safeguarding your RSPs and registered plans, there's nothing better. Because, well, while we are trying to figure out the rate situation here in Canada, affordability here in Canada, the rate issues in the US, and seeing these financial institutions really just dropping like dominoes, we are trying to figure out, you know, what is going to beat this narrative of higher rates for longer. And I can tell you what's going to beat higher rates for longer: the charts. And when you see gold and silver consolidating the way they are, the wider the consolidation, the higher the peak, the higher the explosiveness. So let us continue this consolidation. The consolidation is coming to an end because there are reversals happening very soon in the rates market. The interest rate hike cycle, that is coming to an end, and when that reverses, we will see the epic spike.
And there's looking at this higher rates for longer narrative, the strength of these narratives is very similar to inflation is transitory.
Exactly the same, I think.
I feel like what we're witnessing right now is a inflation is transitory moment. Now, I also in some ways partially disagree with you on that they'll drop rates, because I think that they can solve a lot of issues by just printing money. That said, you may get into a place where the banks are in so much trouble because of the higher rates that they do have to drop the rates. I'm not sure it matters. I'm not sure it will matter in the end, because we are heading towards an epic crash.
Just to chit chat about that, I think, the money printing worked with QE1 and QE2 in 2008. We've never seen money printing before. And to those ends, to that extent, fast forward to today, the amount that would be needed to safeguard and protect their system, this Western institution system, it's gonna blow up the central bank. And plus, that would be happening at a time that the world is de-dollarizing. Who's going to be using that currency? Is that currency going to be in vogue anymore? Likely not. Countries are moving away from the US dollar, so it requires adoption and utility for the US.
Couldn't you say that that's sort of already happening? The Fed is printing billions of dollars almost on a weekly basis. They've added almost $1 trillion, if not over $1 trillion, to the deficit in the US after raising the debt ceiling.
Mm-hmm.
It's like the only thing that's stopping it is the fact that they got rid of the Speaker of the House in Congress, and that there's no money going to Ukraine, and that they're not passing any budget bills.
Mm-hmm.
And then Gates comes out. Do you know what he said? Or
no, go ahead.
Man, the speech was amazing.
Well, I do know what he said.
Oh, okay.
I want you to
I don't remember it as much. I would.
Well, it's in reference to Menendez, the bribe that Menendez took in the U.S. The senator took bribe in cash. He demanded gold. And Matt Gaetz on the floor said, well, because of the inflation and the loss of purchasing power, you can't even bribe anyone with cash anymore. You have to bribe them with gold because it holds its value. It's going to be worth something in the future. He's exactly right. And, you know, it just kind of rhymed and chimed with the theme of last week, which was Costco, the normalization of gold. It's becoming more mainstream. You're seeing it everywhere now. And for that to be introduced on the floor, in the Senate floor of Congress, I think it was a genius statement by Matt Gaetz.
Yeah. And you know, again, you've got Matt Gaetz talking about the dollar not being worth anything, that you need gold to bribe a congressman. You've got the amount that the Fed is printing or creating out of thin air is monstrous. They're not going to tell you this on mainstream news. Don't expect to hear it anywhere. So if you're not listening to places like The Real Money Show or doing your own research, you're really not going to find out what they're doing behind the scenes until something finally breaks, right? So this kind of brings us to the idea of when will it finally break, and are you ready for it?
Right. Exactly. It just brings me to a report like this is geopolitics that we're talking about. One of the four fundamentals that Guildhall tries to, educate as much as possible on, being currency devaluation, inflation, supply and demand, and geopolitics. Just this week, in terms of the BRIC nations and the gold demand, where it's coming from, majority of these countries are part of the BRICS. So we follow what's happening. Russia's finance ministry this week is allocating billions to purchase gold under their fiscal rule. So this is fiscal policy coupled with their monetary policy of acquiring gold. And it just reminds me of the BRICS report that came out earlier this month, where they wrote existing international organizations are controlled by Western countries that manipulate them and impose sanctions. So therefore, according to Gold Telegraph, they said it is necessary to carry out a fundamental reform of the entire architecture. A financial reform is underway, and it's usually involving the gold. It always involves the gold and silver. Your thoughts on this restructuring and reform?
Well, I think that it's coming. And the question is do we experience a massive crash? Are we able to avert it? But the system is going down, and it's accelerating, and gold and silver will be a bridge to the next system, because it's always been money. You look through history, it is always a series of the pendulum swinging from one place to the other. And if you're watching these narratives all fall apart, what's happening is the window is moving towards the truth.
Right.
So, just before the show, we were talking about ESG is falling apart. We were talking about why all of a sudden is Biden building the wall? What's the
border catastrophe?
What's the reverse on policy? Isn't he accomplishing everything he wants? They've gone 2.5 years of pretending that there's not a problem. Now they're finally moving towards fixing it, right? It's a complete
without the borders are going to the border. Obviously, Kamala Harris has never been there before. But yeah, we're seeing a lot of these reversals happening. I'm seeing reversals happening from the Biden wall, and now, from X22, we love David. Hedge funds backing away from ESG. You brought that up. The Environmental Sustenance and Governance, which is a World Economic Forum plan. It's falling apart. The shutdown is looming, obviously. Their plan for the Great Reset and the New Green Deal is falling apart, he wrote. Hedge funds are now dumping ESG stock, and the people are realizing that the ESG narrative simply does not work. It's just exactly what's happening. The shutdown is looming. If you look out defense shares right now in the U.S., the military-industrial complex is down heavily. And in the end, the people are going to blame Bidenomics. And that's what they're doing. They're blaming Bidenomics. They're wondering, they're scratching their head. I thought the border was racist.
And then, of course, we can look to the 70s as a model of what we're experiencing today. And one of the things that they started to do to battle inflation, Jerry, was price controls. We're going to talk about that in the next segment, what to expect, to know what to expect coming up. If you've never purchased precious metals before, start small. Pick up a tube of silver maples, a 10-ounce bar of silver, maybe a kilo bar of silver, that's 32.15 ounces, or 100 grams, or is it 1,000 grams? 1,000 grams. And 1 ounce bar of gold. Start small, go to the e-store, guildhallpreciousmetals.com, or give us a call, the number 18778-SILVER, and you can start to move from there. Once you have some physical in your hand, you'll start to see how it all works, and you'll get very comfortable. We always say that comfort breeds confidence. A lot more to come here on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 18778-SILVER, the website, guildhallwealth.com. We're going to get to price controls in just a minute, but first, Canada just got a dazzling pink diamond encrusted coin worth up to $128,000. Jerry, tell us about what happened over the weekend, why this is going to be important for us.
This is in light of the Christie's auction just passed in Hong Kong. Was it Christie's or Sotheby's? It was like Hong Kong. It was an auction yesterday. Sotheby's auction. Record-breaking, vivid blue, beautiful stone that sold for $52 million. And now we have this collection, which includes an Argyle stone. The Royal Canadian Mint dropped the newest additions to its exclusive opulence collection this past Wednesday. Includes 2 platinum coins featuring some of the world's rarest precious diamonds, pink diamonds from the Argyle mine. So you have one coin called the Boto, I believe that's called. There's limited mintage, about 10 made. It's a 10-ounce platinum coin. And then there's Harmonious, a 2-ounce platinum coin. Was 25 of them minted, so very low mintage, which equals rarity. And this is numismatic art, very beautiful, I thought, with the coin, but Royal Canadian Mint getting involved with the Argyle. I thought that was very interesting, very nice.
Yeah. So 2 beautiful coins, great artistry. You've got platinum coins with Argyle pink diamonds encrusting each coin. You have a premier offer, and then you have a slightly more affordable one. And we were looking at this, Jerry, and we were thinking, wow, this is really great. This is really great. Look, the Royal Canadian Mint must have been talking to their partners at the Australian Mint and Perth Mint and said, oh, wow, we got to do this for ourselves too. They released it at Heffel in Vancouver, sold out almost immediately. We did the math on it. Between the 25 coins and the 10 coins, it was about almost $2.9 million. And then you and I were talking, of course, saying, well, because they're coins, do you pay HST on that?
No, because it's a 99.95 platinum, and it has a face value on these coins. One of them is $1,250, so I assume there would be no HST. I don't know. Okay,
so we're looking at that. And we're saying, oh, this is a way to avoid taxes. What a great idea to buy this type of product and own diamonds encrusted in platinum, and you can avoid paying taxes. And then we kind of got to thinking, like anything at the Mint, you're paying for the artistry, which is beautiful, don't get me wrong, but you're paying for a story. And for that, the premium on it is absolutely ridiculous. I love all of the coins at the mint.ca. You can get anything for anybody. You like Star Wars? Get the Millennium Falcon in silver. You can get it's sold out all the time, but anything, cartoons, characters, your horoscope, all of it. But they're very expensive. The silver in it is worth an ounce, and you're paying $100. You're paying $200. So when we got to doing the math on this, we're sitting there saying, okay, two ounces of platinum,
which is about $2,000, and you have 10 ounces of platinum, which is about $10,000 plus the melee.
And then the thing is that this is kind of a trick in retail for diamonds. They'll say, well, it's 2 carats worth of diamonds. Okay, but the value is in the size, not how many you have.
Adding up
4 quarter carat, 4.25 diamonds is not the same value as a 1 carat.
Right.
So let's do the math on it. You've got 2 carats or 1.5 carats of melee, which is melee is under 0.2. So you might have a bunch of 10 pointers, 5 pointers in there. That doesn't have that's not really value, okay? When you had the Argyle ateliers, they would look to buy direct from the mine something spectacular, something like a half carat VS vivid pink. But to get that, you would be required to buy a whole bunch of melee, SI,
Stuff you don't want.
faint pink, and you'd have to put it into jewelry and make something of it because you'd have to add value to it. And that's what this is. In actual fact, if you were to buy let's not say a half carat, let's say a quarter carat or 0.35 intense pink VS quality Argyle diamond would run you less than 50,000. And you can buy a couple ounces of platinum. That is an investment. Don't get caught up in the story. As beautiful as it is, you can own something that will actually rise in value much more because you're not paying for all of that extra story and artistry, etc.
Yeah. The art is beautiful. It's numismatic, so there's limited mintage and therefore rarity. But exactly, for that one premium coin, the 10 ounce for 130,000. If it was my money, it's definitely just going right into an Argyle stone and buy myself some precious metals because, there are more maneuvers with that.
Now, you were telling me today about a client who acquired a numismatic coin and regarding liquidity.
Yeah, so he purchased with Guildhall back in 2020, and this was when the premiums and the shortages were happening in metals. We didn't know. It was very uncertain. So he bought through Guildhall, and he got caught up buying the numismatic stuff from the Royal Canadian Mint, about $30,000 worth of precious metals, which is fine. It's, these are
It's a great product.
It's nice, but now he's finishing his doing some renos, and he doesn't want to go into leverage and borrowing. So he was trying to sell the numismatics, and he was just simply getting ripped off, and he wasn't finding the buyers for the rarity. So he had to sell what he purchased from Guildhall from us back in 2020, which was about $6,000, and it was immediate liquidity. And I think that's what it comes down to. For me specifically, I like the beauty. I may have one or two pieces of numismatic. I have the Scrooge McDuck, and I love that gold coin. But that's about it. Your thoughts on that?
Yeah, I think that there's nothing wrong with numismatics. They're a lot of fun, but the takeaway is that there's a difference between having the product for liquidity and paying the least amount over the spot price, and engaging in numismatics that are filled with art and you don't get those premiums back per se. So you have to be careful. Why are you doing the numismatics versus why are you acquiring the bullion? One's going to have a lot more liquidity than the other. And if you're in it for gains, if you're in it to protect your wealth, then you really want to look at the bullion and not necessarily with the storied numismatics, which are great. There's nothing wrong with them. You just have to know why you're doing one over the other. The number 18778 silver, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver and the website guildhallwealth.com. Everything here at Guildhall is physical. You can call us direct. You can go to the e-store, guildhallpreciousmetals.com. You can go to the website, guildhallwealth.com, request a package. You can own physical bullion in an RSP, a TFSA, a lira, a LIF. We do see a lot of clients, Jerry, who have pensions that they've left a job and they have this pension from the other job. And what do you do with it? Right. A lot of people are looking to get out of the market. A lot of people also, I find, they feel that there's a disconnect with their advisor sometimes, with their thoughts on the market, their thoughts geopolitically, that they feel disconnected from that relationship in the sense of like, I feel like we've grown apart where you're not really seeing the things that I'm seeing. And we see that, people who are going to mainstream media for answers in the hopes that somehow they're going to tell you what's really going on. And they're not. Mm-hmm. It's crazy to think that you're going to keep butting your head up against mainstream media for answers. They're never going to give it. The mainstream financial news is always going to say things are great. Things are great. We'll show you winners. You want to see a winner? We'll show you a winner.
The recession is always after the recession.
Yeah. So we're just saying that we find that a lot of people like not just the offering of the physical product, but also that from a geopolitical stance, from just our understanding of the world and how we perceive things, I think they find that also a bit of a breath of fresh air as well. Speaking of understanding narratives and watching things, back in the 70s, Jerry, when inflation was getting rampant, the Nixon administration were forced to enter into the concept of price controls. And I really feel that that's coming next. We've seen that with the Trudeau government going after grocery stores, saying, well, they're charging too much, et cetera, et cetera. And what's going to happen is if they start to try to say, you have to limit your prices on this product or that product, I would assume, and I'd love to get your thoughts on this, that those grocers would rather say, well, I don't have to sell that product. And so all of a sudden you're going to go to the grocery store and there's going to be lots of different things that you are taking for granted right now that you can get that just won't be on the shelves in 2 months.
Yeah, I think that's what's going to happen. It's very similar to the precious metal space, what we experienced, especially with price slams just before, around COVID, the 2020, when we saw the volatility then with metals, when prices dropped below a certain point, the wholesalers would not sell. And I think similarly, we're going to see that in hopefully not in the grocery stores, but it's causing a lot of people to pivot away from even the mainstream, the local grocery stores. I was a part of a freedom gathering last weekend. I was a presenter and I was one of the sponsors, and I met some local great people, just local grocers. They're local farming and barter and trade. This is what's happening. People are creating these parallel economies, which is just ingenious methods to avoid uncertainty, because we don't know what will happen in the grocery stores, the grocery shelves, when these types of desperate measures can be implemented.
Yeah, and so let's talk about, you mentioned pivot. So let's talk about this idea of higher rates for longer versus, because we only have a few moments left here, versus when a crash comes or when a crisis hits. Because we've seen time and again that when a crisis hits, all plans get thrown out the window and, there's no holds barred. Anything can happen. There's a freedom to do whatever you want to do. And so if there is a crisis in the financial markets or another bank going under that we bear witness to, that they could lower rates. It could happen. Or it seems like they're printing money like crazy or printing currency like crazy or going into debt like crazy, but they could go into quantitative easing to infinity. And would it matter if they lowered rates at all anyway? So just revisiting the concept of higher rates for longer, matching the narrative of inflation is transitory. In other words, how much credence do you really give to that?
I don't give it any at all, because I know that the central banks are hurting at the moment, that they're losing money. They're making huge mistakes in terms of their trades. They're losing trillions in trades. Mark-to-market losses are huge. So the narrative will change, and I believe that we don't have to wait for the December FOMC meeting for the next interest rate decision. Rate cuts can happen swiftly. I see this interconnected with the government shutdown, Jeremy, because Moody's came out last week, warned that a government shutdown would be credit negative to the U.S. And if that happens, the share markets will begin selling off. The yields and the VIX will start spiking, if the VIX even works today. But this is going to cause the central planners to decide, are we going to continue this fight on inflation? And it's not even working. We're seeing banks going under, people going under. It's a disaster with these rate hikes. For the case of fighting inflation, they'll probably walk away from to safeguard, and they'll cut. And I believe when they cut, it's not going to be a quarter point or a half point. It'll likely be a slash, maybe a 2%, a 3%. And that is when stagflation begins.
Would you agree that happens only under a crisis?
I think they need that justification because for them to start cutting rates just inadvertently and just because I feel like it, no, something will happen, something will break big enough and large enough to give them the justification so they can avert the blame.
You know, at the end of the day, what we're talking about here and the reason why we do precious metals is because you want to be out of the fray. You want the protection of what you own has no counterparty risk. It's nailed down. The wealth cannot be taken from you. It is real wealth. We believe that gold and silver have a long way to run from here. That what you're looking at is the base of a consolidation, lows in the market. We're below the 200-day moving average. The year is far from over. And over the next several years, as all of this plays out, everything that we talk about week in, week out, that you are going to see massively higher prices in physical gold and silver. Or I should say, your purchasing power is going to grow massively. In my opinion, at Guildhall, we believe your purchasing power is going to thrive over the next few years. So give us a call. The number is 1-877-8-SILVER. The website, guildhallwealth.com.
In closing, when that rate cut happens, that stagflation, that's when it begins. In 1970, stagflation begun. Gold went up 838% in that decade. Last week, we talked about a decades-long super cycle. We are in that super cycle. 800% move up right now in gold. Put gold at $15,000 US per ounce. Divide that by 20-to-1 silver to gold ratio, and that puts silver at $2,625. Your purchasing power is protected, but you'll be really wealthy with your holdings of physical precious metals. Give us a call.
And that's it. That's the show. Thanks, Jerry. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Thanks for joining us, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.